Hi, everyone. This is Aaron Larson, executive editor of Power Magazine, and you're listening to the Power Podcast. On today's episode, I'm joined by Thomas Lamb. Tom is the president and CEO of Myriad Uranium. So, Tom, thanks for coming on the program with me. Please tell a little bit about yourself and your company.
Sure, that's great. Thank you for having me. I'm the CEO of Myriad. Myriad is a Canadian company listed in Canada, the United States, and Frankfurt. We are a uranium explorer and developer. I'll talk about that more, what those categories are a little later. We have projects in Wyoming and New Mexico. In Wyoming, we have a project called the Copper Mountain Uranium Project. It was a big project in the 1970s. Union Pacific Railway, via its uranium subsidiary, Rocky Mountain Energy, invested a huge amount of money into it, 85 million US, and they'd planned a large-scale conventional uranium mine that was going to start production in 1983, and that was going to fuel a fleet of planned California Edison reactors that never got built. So that's a very interesting project. We're advancing that. It's large scale. And then our second project is the Red Basin project in New Mexico. So these projects are not producing currently, but both of them produced uranium during the Cold War. And now we're going to refresh and revitalize them and, turn them back on. And hopefully they'll help support the uranium sector in the United States. Personally, I was a corporate lawyer early in my career. I was an M&A and securities lawyer, mostly in the resource sector. And then I became an entrepreneur in mining, and I've worked all over the world, typically build companies from scratch in the mineral sector. And I've worked and helped build companies from zero to over $1 billion with partners. And I was also, a little quirk, I was on the board of Russia's second largest gold producing company, which had mines across Russia, Siberia, et cetera. I lived in Russia. I've been mostly focused on East Africa for 11, 12 years, living and working there largely, and in Russia. But now I'm back to North America, based in Canada, but with these assets in the United States. So kind of a wide-ranging background, career in mining, and now focused on uranium in the United States. Very exciting. That's a bit about myself.
I'm
Yeah.
sure a lot of our listeners who are mainly in the power sector, I believe, probably aren't familiar with the nuclear fuel supply chain and exactly how it works. So could you briefly just kind of explain how that supply chain works from a mine to a reactor, for example?
Sure. And why don't I work backwards? So a nuclear power plant, a large-scale nuclear power plant, boils water to create steam and drive turbines, et cetera, generate electricity. It does that with uranium, and in particular, uranium-235. Uranium-235 in the ground comprises 0.7% of naturally occurring uranium. So if you dig uranium out of the ground, it's 99.3% uranium-238, 0.7% uranium-235. It's the 235 that you can use to, make nuclear bombs, generate electricity, etc. That's what we're concerned with. So in order to make the fuel that these reactors require, and by the way, just a stat there, a typical large-scale nuclear reactor uses about 500,000 pounds of uranium per year. That is the average consumption of a large-scale nuclear reactor, just so people understand that. So you want to get the proportion of uranium-235 in your fuel up from 0.7% to 3.5 to 5%, roughly. Depends on the design of the reactor. And so how do you do that? And how you do that is called the fuel cycle. And what you want to do is, so now going back to uranium in the ground, you want to dig uranium out of the ground in some way. There are two main ways you do that. One is you have what's called roll front sandstone deposits of uranium. They're almost like underground rivers of uranium, and the river itself, in your mind, has a fair amount of uranium that you can extract. But at the leading edge of the river, almost like the wave front, there's a lot of uranium. And what they do is they drill holes down to that level in the ground, and they pump those horizons and holes full of usually acid. And the acid picks up the uranium, binds with it, and then it gets sucked back up. It actually gets pushed back up by pressure down there, up maybe a central pipe, and you end up with a uranium-rich liquid or liquor, and that gets sent off to a uranium mill where it's converted to yellow cake, just uranium in a barrel that looks yellow. The acid can often be recycled and then used again to go get more uranium. So that's one way uranium is extracted from the ground. Another is just conventional mining, and that's where the uranium is there in the rock, and you blast it out and grind it up and separate it in different ways. You can put it on a leach pad. You put it on a impermeable pad, and you spray acid on it, and it pulls the uranium out. And then there are some other ways you can separate the uranium. But those are the two main things. You do conventional mining, just like any mine, underground or open pit, or else that first method called in situ recovery or in situ leaching. So that's how the mining happens. You send everything to a mill, they create yellow cake in these barrels, and those barrels are put into storage, and they wait patiently to be upgraded so that, again, the uranium is mostly, almost all uranium-238, but 0.7% 235. And everybody's goal is to get that percentage of 235 up. In fact, that was the whole purpose of these installations in Iran that got bombed a little while ago. For example, everything is about trying to get the 0.7 up to 3.5 to 5, or for military applications and weapons up much higher, 20% and then 90%, etc. So how do you do that? You mix the uranium with fluoride, and it becomes a gas called hex for short, but uranium hexafluoride is what it is. And that is what you spin in these centrifuges. So you convert the uranium to uranium hexafluoride, the gas, and then you spin it to concentrate it. These centrifuges in sequence, they're huge, they're very precise, they spin at an amazing speed, and step by step they upgrade the percentage of uranium-235 to the target percentage. Then there's another step, and that is the manufacturing of the fuel. You take that upgraded uranium hexafluoride and you turn it into fuel pellets, typically fuel pellets that go into fuel rods, and then those fuel rods are assembled into fuel bundles in whatever configuration is customized and required by a particular nuclear power plant. It's assembled and delivered to the utility, usually utility in the US that requires that particular fuel bundle design. Then the power plants, and I don't know a lot about the power plant aspect, but I understand that they keep an inventory typically of, say, 3 to 7 years of this fuel. Very interesting that utilities, interesting to me anyway. And again, I'm a lawyer or finance person, not a nuclear engineer or et cetera. But key to the utilities is securing not the uranium necessarily, although the uranium is getting tight and more difficult to get, but is acquiring capacity at these conversion and enrichment facilities. That is getting harder and harder, and the cost to acquire that capacity is going up. And that's a really interesting aspect of the fuel cycle. So you need to find someone to convert your uranium and someone to upgrade it to 3.5 to 5%. And then you go out, once you've secured that, then you go out and find the uranium to feed that. And then somebody has to make the fuel. And say there are 99, or for round numbers, 100 large-scale nuclear power plants in the United States. A surprisingly high percentage of those actually get their fuel bundles from Russia, out of St. Petersburg. So maybe call it 30 of the 100, something like that, give or take. So that takes us to geopolitics, what's happening with Russia and Ukraine, etc. I'll add a few other comments that the big suppliers of uranium are Kazakhstan. Kazakhstan produces 40 to 44% of the world's uranium. Canada is a big producer. Australia is a big producer. And the United States is absolutely not a big producer. Before I pause, I'll note that the world produces about 160 million pounds of uranium per year, but consumes 200 million pounds. There's a shortfall there, and that is making life very interesting now. Price of uranium has gone way up. The United States consumes, for very round numbers, 50 million pounds of uranium per year and produces 1 million pounds of uranium per year. And now that's maybe even less than that. I think even last year was 600 or 700,000 pounds, but for round numbers, 1 million pounds. So you have a worldwide supply deficit, and then you have an enormous domestic production deficit in the United States relative to consumption. That makes the U.S. vulnerable. What if Kazakhstan, China, Russia, that kind of work together, what if they cut off the United States? What if some other things happen? And the U.S. could be short of uranium. So it's a interesting situation right now. There you go. There's a bit of a primer on uranium supply chain.
Yeah, you've really opened my eyes. I had no idea that an average power plant used 500,000 pounds of uranium per year. That seems like an incredible amount to me.
Certainly the 50 million pounds consumed in the United States, as far as I understand, is the raw uranium that includes both the 235 and 238.
Mm-hmm. Well, thanks for the background on how that supply chain works. Can you maybe talk a little bit about the history, since so little uranium is produced in the U.S. right now? I'm assuming in the past we probably were a major producer. So what changed, and when did that change, and why did it change?
The U.S. was a really big producer. Now, the uranium produced for the bombs, the World War II bombs, I believe came from Central Africa. But then the U.S. quickly, during the Cold War 1950s, ramped up uranium production. And the government incentivized production, even small-scale uranium production, with a guaranteed floor price and other incentives. So the U.S. produced a huge amount of uranium in the 50s, 60s, 70s, right up until 1979. And in fact, produced a lot more uranium than was needed. So that's partly why, although it doesn't work now because these stockpiles have been exhausted, but for decades, there were inventories of uranium because of that overproduction. And everybody could just access those civil stockpiles and other stockpiles. So huge amount of production in the United States. U.S. was a really big producer. I think it produced, 40, 50, 60 million pounds a year even. But then 1979, there was the 3 Mile Island nuclear incident or accident, and that really froze the U.S. sector, uranium sector, nuclear sector. All the planned reactors, for example, the ones that I mentioned were going to be built in Southern California and that were going to be fueled in part by our Copper Mountain project, they got canceled. Just wasn't politically possible to build nuclear power plants. And of course, if you're a little older, you'll remember that movie, the TV movie, The Morning After. Can't remember the date, but that was sort of, what happens if there's a nuclear war and everybody just turned away from nuclear. Now, that was enthusiastically assisted by the utilities and companies that generated power in other ways, right? You can imagine the coal lobby, the whatever hydroelectric lobby, the whoever got very excited when they could shoulder aside the nuclear alternative because they got to grow their business. So there's lots of dynamics there. But across the Western world, nuclear fell out of favor in 1979. And the production, so the investment, so what you have to do in mining is for any commodity is there is an equilibrium in most commodities, copper, nickel, zinc, uranium, all these things. You need money to explore for new deposits, and then you need money to build mines and then to do the mining, initial mining, and then hopefully you pay it all off selling the commodity. With the price of uranium collapsing after the 3 Mile Island accident in 1979, the money to find new uranium deposits in the United States, but also globally, it really dried up. Soviet Union had a different system, of course. They just did whatever they felt like, so they kept going. But the rest of the world, exploration and development of uranium projects just evaporated. So, that's why the uranium situation in the U.S. is what it is. 2006, because of some interesting things that happened, one of the big Canadian uranium mines flooded, and the price of uranium just spiked dramatically. And the sector in the United States was revived temporarily. Big investment flooded back into the U.S. 2006 to roughly 2012. And a lot of money was raised, new exploration, etc. But then Fukushima happened. And was Fukushima 2011 or 2010?
Yeah.
I can't remember.
Yeah, 2011.
Yeah, there we go. So, and that put paid to the uranium sector again. It was just getting going, and the world turned away from nuclear again, and you just couldn't raise money to explore because in all these commodities, you need to be constantly finding new deposits of whatever, just like oil. Otherwise, and there's an equilibrium. You run out, the price goes up. You're able to raise money to find new deposits. You find them, you produce more. The price, goes down, and it kind of fluctuates in everything. So the U.S. again turned away from uranium, and globally, world turned away from uranium, and so that means no new discoveries, no new projects. Nobody paid attention to this because there were nuclear weapons. You could downblend, the material in nuclear weapons to make reactor fuel. There are civil stockpiles. There are some, Asian stockpiles. However, some very smart people. There's a group of, I think they're Wall Street bankers, but I think they're in Connecticut. They're called Sachem Cove, Sachem Cove, and led by Mike Alkin and some others. They just started thinking about uranium, I don't know, 6 years ago. I mean, wait a second, this might be interesting. What's going on in the uranium sector? We haven't had, the price hasn't moved in a decade. It's really low, but there have been no new mines built, no discoveries. They figured out that the price was likely to really jump, and they made a bet on that and raised money, and they've been very successful. And indeed, the price of uranium has tripled in the last 6 years because of this lack of investment. And now it's game on in the uranium sector. Uranium is hot. The world needs a lot of it. I talked about the production supply deficit, like the supply demand imbalance. 160 million pounds produced every year, 200 million pounds consumed. And that is starting to bite. And then you have now artificial intelligence, data, and then just the need for more electricity going up worldwide. And so we need a lot more electrons, and nuclear is one of the big solutions. China is building nuclear power plants at a really, really rapid rate. And the US isn't yet, but hopefully that will change. And so, it's game on for uranium. So it goes all the way down to companies like us, where the money is now available for us to go find uranium and turn on old projects, restart old projects.
And from what I understand, Myriad is operating on what's called a proof before production model. Now, I don't know what that means. Maybe you can enlighten us. And how does that differentiate you from other explorers that are, rushing in to capitalize on these markets?
Yeah, so that's one way to put it. We're lucky we have a brownfield project that saw a huge amount of investment by Union Pacific. So the uranium is there, but it's historical. The data is old. So we're going to go back and confirm, under the regulations anyway, we have to go back, reconfirm that the uranium is there, how it looks up in the subsurface, and model the deposits, and then we can plan production. Other other companies that are just looking for uranium, they're out there. They've got hints that there's uranium in the subsurface, and they're just drilling holes, trying to find it. In our case, we already know it's there, because a lot of the work was done, and now we just have to. It's called bringing it current, bring the information current with some of our own work, and then we can be off the races. So that'll take a couple years. Then we can hopefully start producing.
And I read that there had been like a study, Bendix DOE study, that suggested that there was about or more than 655 million pounds of uranium at this Copper Mountain site that you are developing. And yet I also read that Myriad calls this historically underexplored. So what did they miss back in 1982, and what's changed that might make this more technically or economically viable as a production site now?
Yeah, 1982, the Cold War was still going, even though 1979's 3 Mile Island accident had resulted in a dramatic drop in the uranium price. Everybody was still interested in uranium for all sorts of other reasons, military mostly. So the U.S. Department of Energy did a study of Copper Mountain and assessed that there's 655 million pounds of uranium there. And that's down to 600 feet depth, just kind of as deep as maybe they were going to build the open pits to mine it. By the way, that assessment is not of uranium that was viable to mine. Some fraction of that would be mineable at reasonable uranium prices. At really high uranium prices, of course, you can mine a lot of it, a high proportion of it. But Copper Mountain is underexplored because what Union Pacific did, and what everybody does, is they went after the easy stuff first. Copper Mountain is on a hillside. It's not in the mountains. It's sort of in the rolling foothills. And there are some canyons and steeper hillsides and things like that. They avoided those areas and just went to the easy places, drilled those, found uranium, kept drilling, found more uranium. And they did that. They found 7 deposits and 15 what we call prospects. Those prospects are areas that they drilled somewhat, found uranium, but then didn't get a chance to continue at because everything was shut down because of the fall in the uranium price. So if you imagine a 5 by 5 mile, 25 square mile area, they went to the easy areas. That's maybe 30% of that acreage. And the rest is very underexplored. And this Bendix study, 1982, assessed with all sorts of interesting work that The uranium continues under these hilly areas in the canyons, et cetera. So we'll just have to drive our own roads, maybe with bulldozers and or some other ways to access these areas and just get to them and drill them ourselves. So, that makes sense. That made sense to go for the easy stuff back then, but it's cheap. It's cheap to cut a road. It's a soft material and it's a very accessible area. So that's why we say it's underexplored, and that's what was missed in the earlier studies, is they just simply did not bother with the more hilly areas. They saved them. They were going to save them until later. They wanted to start their mine, get producing, and then continue and explore those other areas. But now we get to. Also, we do have great technology now. We have satellites. We have got drones. We do what are called radiometric studies. We fly these drones over the whole project area, and we measure the radiation emanating from potassium, thorium, uranium um, from the ground right there, and we can see where the uranium is, so long as it's poking out of the ground, or thorium or potassium are, and that basically maps out where the uranium is. So that was a lot harder for them to do back in the day, and they really just didn't do it. So even if just over the hill, 1970s, there was a lot of uranium, they wouldn't have known. But we get to fly a drone over that hill and see that on the other side there's potentially a huge amount of uranium, and we get to go get it.
You've mentioned, that the prices of uranium have gone up and down. It's been pretty volatile over the years. What makes you think that this is different than before, that this isn't just another cycle where, the price is up threefold today, but it could be back down in the dumps a year from now or 2 years from now? What's structurally different?
That whole "it's different this time" is the bane of our existence in the resource sector, whether that's oil or minerals or whatever, or anything in life, isn't it? I mean, isn't that funny? It's different this time, and that we're very conscious of that. But we really do think it is different this time. So in the past, the volatility in the uranium price has been due to short-term events, whether that's a flood at the world's key uranium mine in Canada at the time, 2006 approximately, and then a sudden panic, and then the price spikes fivefold, and then collapses after that. Or in the 1970s, the U.S. federal government just basically promising a floor price for uranium that was quite high, and that totally independent of supply and demand factors. If you produced uranium, you're going to get a very high price for it. So there's that. This time, the market is free, and the price of uranium trades based on supply and demand factors. And there simply is not enough supply. And demand is rising. Supply is actually going down because of this underinvestment. And you can go to Wall Street bank reports, their forecasts, their analyses. You can talk to other experts. There's just no short-term or medium-term solution to the supply-demand issue. And that's why this time it's different. There's sort of no governments intervening, no accidents, no panic. And utilities, these are the Chinese, and then all the US utilities, plus, India, Russia, et cetera, Europe, France, they don't care what the price of uranium is. The price of uranium is just a tiny factor in their list of costs related to running a nuclear reactor. So they're not sensitive to it anyway. That's an important thing for people to realize. They don't care what the price is. I'm exaggerating a little. They're conscious of it, especially now the price has tripled, and instead of it being 1% of the cost of running the reactor, it's now 2% or something. But that's a factor too. Nobody's motivated to lean in and really invest in this, because on the utility side, on the buyer side, because they're going to buy no matter what. They have no choice. They are buying 500,000 pounds of uranium per year per reactor, and that's happening. Doesn't matter what the price is. So that's a little bit what's different. Yeah. Long term, the world can solve this. There's lots of uranium around in the world. It's an abundant thing. But the next 5, 10, 15 years, there really is no solution. It takes 10 years minimum to build a large scale, find and then build a large scale uranium mine. And there's only one in the world that is under development. That is in Niger, in West Africa. It's a beautiful mine called Dasa, Dasa. But unfortunately, Niger experienced a military coup 2 years ago, and the place is very unstable, and it's hard to finance that one mine. But that's it. And then the rest of the world, there are a few small mines that maybe will come on stream, maybe not. Everybody else is being stretched to the limit. Kazakhstan is working their assets to the max, trying to squeeze every bit of uranium out of them, and maybe in a not a very sustainable way. So that's a whole other kettle of sushi we can talk about in terms of things that could go wrong, and then uranium price goes parabolic from there. But yeah, very interesting. That's the situation.
Kind of going back to the premise that you laid out earlier about how much uranium it takes to power a plant, and I think it was working out roughly to the U.S. is supplying uranium to about 2 of the plants in the U.S. and getting, almost 40 or 50% from Russia and other countries. So that seems like a potential national security issue. And I'm wondering if there's any government support to kind of get the industry back on its feet here in the States to better support our own nuclear industry. Do you see that coming, or is that coming or happening today?
Absolutely. Under a Biden administration, very conscious of this, and they passed some excellent laws that really are the foundation right now. Trump has come in and put out some executive orders and added to the support. So the federal government's very conscious of this. There are executive orders, fast track permitting. Trump has just designated uranium as a critical mineral that enables Department of Commerce, Department of Defense, or Department of War, I guess it's called now, funding for some things. There is a lot of money. With that designation comes a lot of financing from funds, specialty funds, big private equity, venture capital, and then pension funds, et cetera. So it enables the money to flow in. There are tax credits, grants, matching funds, mostly at the state level, where, for example, we raise $10 million to do some drilling. The state will match that, give us, $10 million. So we do $20 million worth of drilling. There's some of that happening. So yeah, the governments are leaning in and supporting the uranium sector, definitely. And then up the fuel cycle, this again, conversion, enrichment, fuel manufacture, all of that is being invested in also. You've got tech companies, the existing players in the uranium sector, EDF, that's Électricité de France, that's the French utility. They've got a lot going on. Orano, the big French national champion in uranium, they're investing big time. The 2 big companies in the world, in the Western world, in the nuclear and uranium sectors are Orano from France and then Cameco from Canada. And they're both heavily invested in the United States. And you'll see big expansions in what they're doing. The Canadian company bought Westinghouse a couple of years ago, which does a lot of, to some extent, building, but mostly servicing of nuclear power plants. And then there's all sorts of things to do with the fuel cycle too that they're involved in. So there's it's a Canadian company that's really leading the charge and helping to support this in the United States. Yeah, so there's a lot happening, and it's definitely supported by the government.
And I know you recently closed a significant financing round, and so I'm wondering, what are some of the milestones that you're targeting in the next 12 to 24 months at Copper Mountain and Red Basin on those projects?
The 2 projects will see quite a bit of work. We've raised, so our business is explorer developers. So we raise small amounts of money and try to spend it efficiently, and then raise more. Sort of the best way to do it. We raised 8.6 million just last week, and we'll spend that on drilling at Copper Mountain. So, we'll drill sort of 30 to 70 holes over the next while to help us understand the project and find new uranium. That'll be very exciting. We should generate, exciting news, and then raise confidence that we're going to turn this into a large scale uranium mine. So that's Copper Mountain, Wyoming. And then at Red Basin in New Mexico, we just finished some geophysics, which again tells us where a lot of the uranium is, hopefully, at least at surface. And then we're submitting a plan of operations. That's a large scale drill permit or a plan to operate at Red Basin that will enable us to go drill lots of drill holes and probe old holes to find out what's down those old holes. It saves us some money. So yeah, it's a very active time. We get to advance both projects, and we're quite well funded to do that.
Do you find it difficult to manage these different projects in different states with different regulatory rules and different communities that you have to deal with and geological differences? How do you do that? I mean, is it troublesome, or is it just doing business the way you do business?
So that's a great question. That's something that not many people ask, but it is absolutely the key skill in this business, or in our business, because this is like a startup, but I'm a corporate lawyer with extensive experience building companies and operating in Africa, in Russia, in Latin America, where things are very complicated. Two of the other members of our board of directors are senior lawyers with vast experience operating all over the world. We have our technical people. Our chief geologist is from South Africa, and he's built projects in the Sahara Desert, South Africa, North America, etc. This takes a huge amount of experience and knowledge and kind of understanding, and community comes first. You need the local community to be into it and delighted that you are there. So that's number one. Otherwise, the project's not viable. So we're used to that as being priority one, and we go straight to that. Regulatory stuff, all of this is very regulation heavy. By the way, as it should be. Maybe this is a bit of a Canadian perspective on things too, but there's a reason why countries that have a ton of regulations over everything are the rich countries with very high incomes and wealth. And where you cut regulations, there's a correlation with everybody getting poorer. This is not to say that it's not a great thing to streamline regulations to the extent you possibly can, but regulations are very important, and we are experts at navigating all that. And yes, there's a ton of it, but you need to be careful with water, wildlife, flora, engineering, because if you don't have proper regulations, you build a tailings dam or some other structure at the mine, it collapses. This happens in mining around the world. It's happened in Wyoming, happened to the Navajo in New Mexico. Then you end up with a big accident and a big problem. So the regulations are very important, engineering. And so there's all these skill sets that you bring to bear. It's incredibly complicated, but it is also so much fun and so interesting. So the answer is it's very difficult. And that's why it's specialized. There's not a lot of people that do it. And you also have to be a real risk taker, because all the things I just listed could stop you in your tracks. Everything from the price of the commodity being volatile, to local issues, to regulatory problems, to wildlife, water, all that stuff. Yeah. Anyway, that's a bit of an answer. I find it all absolutely fascinating.
And it makes me wonder, do you worry that investors might have different expectations than what is realistically possible or achievable? For example, I know these mining projects can take decades to actually reach production. Do your investors realize that, and do they have the patience to go with you through this entire process?
It's a mix of, we call them retail investors. This is typically individuals who maybe are sophisticated, maybe not, have heard the story, decide to invest, and then a mix of investors like that, and then sophisticated or institutional investors. These are family offices, wealthy families, wealthy groups, or pension funds, and they have specialists. And those specialists go into your data room, they investigate your company. You sign an NDA, they get in there, they take a look, they get their expert to give them a view on what you've got. And then they do their math, their model, and they figure out whether they think it's a good investment or not. And then there's some other types of investors, strategic investors, other companies that may want to buy you or are interested in you, so they kind of buy part of you so that they can be connected with you and then take a close look at you. So it's a mix. So we're never worried about the strategic people or the sophisticated investors. They absolutely know what they're doing, and they know, that if they invest in 10 projects, that 2 are going to work out, but those 2 are going to provide a huge return. About retail investors, yeah, that's a worry. There's no way for them to really know or understand. But if it's any comfort to everybody, we as management, we don't know either. Um, so we're doing this because we're crazy entrepreneurs. We have the dream too, that we're going to turn this into something amazing, and we put our own money into this. I've got hundreds and hundreds of thousands of dollars of money in my checking account in this company, and we all do that type of thing, or usually. In fact, that's something investors should look for. How much we call it hard cash. How much hard cash is the CEO invested in their own company? That should be the first question people ask, in my view. So yeah, no, it's everybody's unrealistic, including management. We all think this is very exciting. That's why we're in it. There's huge potential. Now, the way that business works is maybe a little different than in terms of making money, is a bit different than people think. If you're investing in small mineral companies in this sector, unless you're really into it, I don't recommend that people sort of invest and then sit around for 10 years waiting for the mine to get built. What happens is as you advance the project, it gets de-risked. The value of the project goes up, your risk goes down, you've made money. What you want is to take some money off the table. So the actual game here is, you see a project like Copper Mountain or in a company like Myriad, you think, well, okay, this is undervalued relative to the risk reward and the potential. Maybe this won't become a mine for another 5 to 7 years, but they're going to they're going to de-risk this project over the next 2 years. They've got a lot of money. They've got fantastic investors. They're going to be able to come up with the money and do the work properly. They've got smart people involved. They're going to de-risk this, and the share price that's now 25 or 40 cents is going to be $3 or $4 in 12 to 18 months, because they will have executed their plan. We're still not producing at that point. That's when investors, including retail investors, individual investors, should take part of their money off the table. Sell half. If you've gone up 5 or 10 times, sell half of your investment, and then stick around for more de-risking. That is the strategy here. Then it doesn't matter if this becomes a mine ultimately, because a lot of these projects don't. That's not the business. Only 1 out of 2,500 projects becomes a mine. What you want to do is invest in things that are of quality management. They're going to do a good job at a good project, advance it. Hopefully the price of the commodity is cooperating, and then you continue to take money off the table as they advance the project.
So if everything goes right and, you're working your plan for Copper Mountain and Red Basin, what does that look like 5 to 10 years from now? And what are your expectations for Myriad and the role it might play in supplying nuclear fuel in the U.S.?
Well, to cut to the quick, we maybe will produce 4 or 5 million pounds of uranium a year. So if the demand is, say, 60 million pounds, maybe we could provide a big part of that. In the interim, we're going to continue to advance the project with our drilling, de-risk it, get it ready to be turned into a mine. And then that's where my group, we exit. I do not build the mines myself. That's not my skill set nor my team's skill set. So it'll get handed off to either a group that has bought us or will buy us, or just new management team and new investors, because the type of investor that invests in a company like ours is different than the kind of investor that likes mine building and mine and production from mining. So we'll advance this for a couple of years, and then my group will be on its way probably, and a new group will come in and take it to the next level. Ideally, again, we'll produce 4 to 5 million pounds of uranium a year, starting in some number of years. I'm not supposed to speculate as to how long it would take, but call it 5 years, 7 years. Could be producing sooner than that, just maybe not at that scale.
Well, Tom, I've taken more of your time than I expected. Is there anything that we haven't talked about that you think might be important to touch on?
I don't think so, other than it's been a pleasure talking with you. I think people who are interested in uranium, do take a dive into it, follow some uranium companies. Please put us in your ticker, even if your listeners don't invest in Myriad. Put us on your stock tracker and watch how we sort of build this company and turn it into something exciting. It's a wonderful and very interesting part of the global economy, how mines are discovered, developed, and then ultimately turned on and produced. And it's really, really interesting. So, I hope your listeners follow along, and anybody who wants to invest is welcome to call me, contact me, email me to learn more anytime.
It is a publicly traded company. Can a person just go and
Yep.
buy stock?
You sure can. Yeah. Yeah. Anybody can go buy in the US or Canada or Europe.
Well, again, for listeners, I've been speaking with Thomas Lamb. He's the president and the CEO of Myriad Uranium. It's been a pleasure having you on the show.
Thank you for having me.